A high personal credit score looks great on a screen, but its actual utility is limited unless it is systematically converted into cash. We are going to walk through the exact mathematical sequence required to build a corporate entity from scratch, and then use it to secure multiple lines of high-limit business capital at the exact same time. The process starts with your personal profile. Before a bank issues corporate funding to a new business, they require a personal guarantee. You need Tier 1 credit, a score of 760 or higher, to pass the initial underwriting filters. Your personal name acts as the upfront collateral. Once your individual reputation is solidified, you can leverage it to access corporate capital. With your personal credit secured, the first step is building a business identity that meets the strict compliance standards of commercial lenders. You need 4 basic elements to establish this entity: a registered business name, a physical address, a dedicated phone number, and a professional email address. You do not need to buy an expensive virtual office to meet these requirements. You can legally start by using your actual home address and your personal cell phone. Next, go to the IRS website to obtain an Employer Identification Number, or EIN. This functions exactly like a social security number for your business, and the application is completely free. Take that EIN to your state government's official website and file a certificate of formation. This will require a nominal state fee, typically around $125. Paying that state fee legally transforms your operation. You are no longer acting as a sole proprietor. You now have a limited liability company, which establishes a strict legal firewall between your personal assets and your business debt. Now you must connect that new LLC to a capital source. You need to open a business checking account and build a relationship with a target bank. Look for relationship-friendly conventional banks like Chase or Citizens, or member-based credit unions like Navy Federal. If you apply for a loan on the day you open the account, the bank's algorithm will automatically reject you. Your entity has no financial history, making it an unquantifiable risk. Look at this chart. To bypass that automatic rejection, you must season the account by crossing 2 specific thresholds: maintaining $10,000 in the checking account for a strict duration of 45 days. You execute this by breaking your starting capital into systematic weekly deposits of $1,000, rather than one lump sum. This builds a consistent track record of inbound cash flow. Completing this exact chronological and financial sequence satisfies the bank's internal algorithm. It reclassifies your business from an unproven risk into a low-risk borrower. The traditional problem with seasoning is capital efficiency. If you want to approach 3 different banks, you would normally need $30,000 sitting idle. You bypass this requirement by linking your external accounts across different banking apps. You schedule automated transfers to move the exact same block of capital from the first bank to the second to the third and back again in a continuous loop. The algorithm only reads the deposit history. That single block of capital successfully seasons all 3 banking relationships over the exact same 45-day period. Once the 45 days have passed, you execute the final step, applying for business credit at all 3 institutions on the exact same day. This requires targeting banks that verify credit using completely separate reporting agencies. Using this new corporate debt to buy a depreciating liability, like a sports car or flashy lifestyle items, is a massive error. You will burn through your liquidity without generating any new income to service the debt. Returning to the formula we started with, personal credit yields liquid capital, but that capital must be converted into an asset to produce actual equity. This business funding is designed specifically to acquire cash-flowing assets. You deploy the cash into real estate or operational equipment that continuously generates revenue for the LLC. This leverage is accessible the moment you build the proper infrastructure. You can begin this exact sequence today by registering your entity and securing your corporate shield.